This is the Self-Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self-Storage Podcast. I am your host, Scott Meyers, and this week's guest is Marcus Fowler, the Executive Vice President at the Tricore Investment Group. Marcus has an extensive background in sales, marketing, and investment management experience with over 25 years in upper management in the private equity field. He has held executive positions with some of the top real estate investment and Fortune 50 companies, as well as premier Wall Street investment and venture capital firms. Marcus earned a bachelor's degree in marketing and finance from the University of Central Florida and an MBA in international finance from Arizona State University, School of Global Management, and a second master's degree from Rollins College. He has held both Florida real estate and contractor's licenses, in addition to Security Series 7, 22, and 66 investment licenses. Marcus recently joined the Tricore Investment Group, where he and I worked together to raise capital for the Tricore Fund and other self-storage ventures. So without further ado, please enjoy my wide-ranging conversation with my friend and colleague, Marcus Fowler of the Tricore Investment Group. Marcus, so good to see you, my friend. Welcome to the show, finally.
Thank you. It's an honor to be here with you, Scott, today.
Well, Marcus, I've given everybody a little bit of your background and how we work together at the Tricore Fund, but I'm going to let you fill in the gaps, talk a little bit more about yourself, what you've been doing in the private equity space, and then what you're doing today in the Tricore Fund.
Well, thank you. And thank you for everybody for joining us and listening in and learning a little bit more about the self-storage space. I'm quite honored to be with the Tricore Investment Group and the Tricore Storage Funds, which is a series or family of funds that we represent as investment managers. And just a little bit about my background. I've always been in sales and marketing of some sort. I started my career, with top, Fortune 50 corporations, IBM, Weyerhaeuser, Control Data among them, and excelled in different sales positions and management positions with them. And I struck out on a more of an entrepreneurial mindset several decades ago in the investment industry and investment sector. And I started out in the mutual fund industry and separate managed accounts. And then I got into private investment world with Reg D sponsored types of investment programs. And I worked in various sectors, and I learned my skill set and craft by being with different types of Wall Street money managers. I worked for Morgan Stanley for about 4.5 years. I ran the whole southeast part of the United States for them, marketing their mutual funds, and eventually, worked with different sectors, I guess you could say, in the film sector, the energy sector, real estate, venture capital. So I garnered a lot of experience and wiseness about what was going on in the investment space and investment world. And eventually, through a friendship with Scott Dayan, who's the CEO, and Ken Lang, who is the CFO of Tricore Investment Group and the Tricore Funds, I took the friendship that we had, and we started exploring different strategies and ideas where I could become an important factor with the company as it was growing. And I joined Tricore Investment Group about 3 months ago, and I was designated as an executive vice president for the entire marketing and capital development elements of the company, where I form a strategy with the partners and provided a direction for the company, an action plan and marketing plan for the company to take us to a higher level.
Well, Marcus, and we couldn't be more pleased to have you on board, and I've been excited to be able to work alongside of you to have somebody else to kind of share, first of all, the marketing side of the business, but then also the tactics and strategies that you've learned over the years, and the ideas we've been able to share to how to go about, and how we are able to go out and look at this marketplace, especially in an ever-changing economy that we have right now. There's a whole lot of folks that are looking at investing a little bit differently, as they should, a little more cautious in how we meet them right where they're at, whether it be the family offices or the individual investors themselves. And speaking of which, Marcus, when we were in New York a couple of weeks ago, speaking with several of folks that are heads of family offices and then also syndicators like myself, I'd be curious if you wouldn't mind sharing what your takeaways were from that event that spoke specifically to where we're at in the market right now.
Yeah, that was quite an exciting event to participate in from my perspective, because I've been at probably dozens, if not hundreds, of these different conferences and venues that private investment groups offer. I think the things to take away from that was that we had a booth, as you recall, there. And I think we probably were more visited than any other booth and any other venue in the entire gambit of the room where we were. There were probably 50 different sponsors in there. We were the only self-storage sponsor. And my goodness, we must have had anywhere from 2 to 6 or more people at our booth at any one time talking to us about self-storage. And the reason why that is that the family office space where we were invited is a very sophisticated investment arena. And it's really not only headed up by wealthy or wealthy families, but they have a very sophisticated element of investment advisory, usually within the family office themselves. They have chief investment officers, they have research analysts that are going through and pouring through different types of investment opportunities. And usually about 45 to 50% of the investment bottles that they have are allocated toward alternative investments. And much of that is real estate. And the real estate sectors that have been popular through the years, of course, have been industrial, multifamily, medical, office, etc. And self-storage, unbeknownst to a lot of people, is kind of a quieter type of asset class that's been around for several decades, but people have just taken a listen to it recently. And it's probably, I think, in the last 25 years, NA REIT had pointed out that self-storage has outpaced the entire commercial real estate asset class as a whole by averaging around 16.85% average annual returns as compared to its next closest asset class, which would be industrial, which is 20% less, probably down around 13%. And then behind that, you have medical, you have office, industrial, et cetera. And retail, of course, comes up at the tail end around 11 or 12%. So self-storage, through ups and downs, through different kinds of economic environments, including recessions, COVID, everything outperforms every major commercial real estate asset class, bar none. And it's really now that multifamily has kind of wound down because the cap rates are kind of crazy. Interest rate environment has gone way up. Self-storage is really a shining star right now. And a lot of people look at this as a cultural phenomenon because somewhere between 10 to 15% of the U.S. population has experienced self-storage in one form or another, and I'm one of them. So, it's here to be, it's here to stay. And we have a wonderful opportunity with Tricore, the Tricore series of storage funds for investors to come in and experience an institutional level quality type of fund. And what really characterizes this whole story to me is the management that we have. Because if you're going to get involved in an investment of any kind, you want to have a management group that can provide the experience, leadership, and expertise, no matter what the circumstances are with the economy. And this management team that leads the Tricore series of funds, storage funds, has experience well over 2 decades, not only in self-storage, but in commercial real estate as a whole, but self-storage specifically. They have managed and have been involved in a series of investment opportunities and have always risen above the benchmarks that are out there.
Yeah, not to toot our own horn, but Marcus, you're coming in as an insider, but formerly outsider not too long ago. Obviously, that's one of the things that attracted you to working with our organization as well, and myself as well. And, as we continue to get the statistics and looking back on not only the performance of the industry, which is a great story to tell, as you just mentioned, the family offices are tripping over each other to come chat with us. But then, the fact that our returns are double the industry average. Industry average for the past 25 years with storage, as you mentioned, 16.8%, and we're at 34.6% average amongst the entire group, the entire staff and the team within Tricore. So, roughly doubling the industry averages, and I don't say that for any other reason other than there is a reason to get into self-storage during a recession, and that's because it produces those solid returns, and that's why we love the business model. But shifting gears a little bit, when we look at the economy that we're heading into right now, we know self-storage, again, very recession recession resistant. This will be my third recession that I've gone through. I would say that this is probably, you've got at least one more under your belt. Tell me the side that you've been on. I've been on the retail side. You've been more on the institutional side. Tell me how the institutional side and investors, approach a recession. I mean, we know retail is more individual investors, even though they're accredited and sophisticated. They also tend to, watch Wall Street. They listen to the news, see what the Fed's saying about interest rates, and they begin to pull back a little bit and hold on to cash during a recession. What are the institutional investors? What have you seen them do historically over the past few recessions?
To that point, I have broad experience on the retail side and the institutional side. But I could say on the institutional side, it's all about asset allocation. As I noted earlier, they are usually proportioned with alternative investments very, very aggressively, more than I would recommend for a retail investor. They're probably upwards of 40 to 45% of that. And much of that sometimes is with hedge funds and other various types of investment managers that are out there. But real estate is a major, major component with them. And I would just suggest to the listeners here that are watching in or listening in to the podcast that they kind of follow what the large endowment funds are doing. And they usually provide a asset model for what is going on in the marketplace. The Yale Endowment Fund is a good example to utilize in something like this, because they've provided average returns, I think, around 20 to 22% on an annual basis. The other ones that are out there that are big monolithic funds are the Yale Endowment Fund and such. These big institutions are what I would call more proactive in the marketplace than being reactive. Retail investors are more reactive. They react to what's going on in the marketplace. They kind of do a knee-jerk reaction to, different things. Like right now, you might find retail investors, oh no, they're spooked a little bit because the interest rate environment's going up and they just don't know what to do and they're going to sit on the sidelines. And to me, that's not the thing to be looking at. You have to be looking at these different asset classes, which ones that have proven out over several decades of time, and that makes sense to put some of your money allocated into. I'm not saying to be some of your portfolio to be in a cash or liquid position, but certainly you want to still maintain some existence and some investments in certain classes that make sense for allocation. And one of them, of course, as we just mentioned, is self-storage. There's no ifs, ands, or buts about it. It's not that you and I are touting this. It's a fact. If anybody does any research on it, we invite them to do some research and take a real active look, go on the internet, go on Google or whatever. And that's the proof of what we're talking about here.
So, Marcus, we've got an awful lot of folks on this podcast that are also syndicators, and they run funds as well. They're promoters, and they're on the investment side and raising private equity to grow their businesses as well. And so one of the things that we heard loud and clear from the family offices and other folks, this falls true for both the institutional as well as the retail investors. They need to do their homework. They're going to do their homework and dig in, do their due diligence on us as fund providers. What are some of the things that you've seen over the years, and even the things that we've just learned recently, that are maybe the top three things that investors are looking for before they would invest with the Tricore Fund or any of the other folks out there that are raising capital and deploying it in self-storage?
Well, I think there's a number of things, but of course, the performance, where are you in relation to the benchmark? Do you underperform? Are you right there with the benchmark, or do you outperform? And as you pointed out, our management team has outperformed the benchmark by almost doubling it. In fact, where the benchmark is about 16.84, we've been averaging in the last 15 years, roughly 34% plus. Internal rates of return for the investors. I think that's a remarkable statistic to look at, is that we are able to do this, and then not only do that on a basis that shows that we've been through thick and thin and all the different economic environments, but we have a team of well-seasoned partners and management people that have their, not only bringing A game, they're bringing their A+ game. Like I said, I've worked for so many Wall Street firms. I've never seen such a spectacular team with such incredible backgrounds and expertise as what's been assembled with the Tricore Storage Funds. It's just everybody up and down, all the way from the acquisition side of the business to the operations side of the business to the dispositions. We know exactly how to operate and take properties. Sometimes we modernize properties. We take B and C properties and modernize them to A-class properties if possible, or upgrade them to the best possible. We will convert assets, whether they be retail plazas, could be office complexes or warehouses that might be underperforming. We could convert those to self-storage centers, or, we'll even look at ground-up development if it makes sense. But what's fascinating to me here, Scott, is that these big family office conferences that are hosted around the world, and all the epicenters of financial that you can think of. I don't care if it's New York City, San Francisco, London, Paris, wherever they are in the world, there's these big family office conferences being held where these ultra wealthy families are attending. And they've never really had self-storage as a participant in any of these conferences. And it's amazing to me, and I think it's plaudits for Tricore, that we've been invited to the most coveted and most highly touted family office sponsors. And some of them, the names I'll just give to some of the listeners here. Prestel and Partners, based in London. They only have 6 or 7 conferences in the world. We're going to be attending one of those up in New York in about 2 weeks, less than 2 weeks. Another famous one is DC Finance out of Israel and New York. They have world conferences all around the world. They probably have a dozen or 2 dozen. We're going to be in 2 of those this fall and winter. And then Family Office Club, which Scott, you're familiar with. It's headed up by Richard Wilson. We're in 2 of their conferences this year. So this really speaks to itself. If you're a retail investor, you have to wonder, why is Tricore Storage Funds, a boutique firm in Altamont Springs, Florida, outside of Orlando, being invited to all these prestigious conferences? And the net of the whole situation is that we have a track record. We have a history of outperforming. We have the management and the leadership, and we know how to purchase, operate, and disposition, sell off these assets when we feel they're properly. And not many money managers out there can say that they've gone full cycle and they have an defined exit strategy with these different investments like we have. So I think this is all the exciting components that investors have to take a close look at.
Well, I asked you for the top 3 and you gave me 2. So how about I fill in the third? The first is a track record, and obviously that is first and foremost. And the second is has this syndicator, this promoter, this management team been through a recession before? Because there's a whole lot of folks that can make money and have made money, and an economy with a huge wind, in their sail and at their back. But what separates the wheat from the chaff, or the folks that are truly doing this and have been doing it and producing returns consistently, are the ones that have been through recessions. And then the third, and what most of these fund managers have stated was the most important, is integrity. And that's a tougher one. You can't put that in a brochure. You can't put that on paper. You can't really measure that other than, interviewing. And that's when we are having those discussions, and as any good fund manager will do, they'll ask those questions to try to root that out. Give us a situation, give us a time when and how did you handle that, so that they can better understand, and then also through a referral basis. And that too is where, the folks that have been around a while can shine, because they can say, hey, we've been through not only bad times, but here's what we did for our investors during those times. And we have had an experience where there was a project that didn't meet our expectations, and here's what we did for our investors. And just proving those things out. And that doesn't happen within just a few years of opening up your shop and hanging your shingle out. That only happens after many, many years. And so again, not pointing directly back to us, but that does go with many, many years of experience. As you mentioned, Marcus, 20 years plus. So Marcus, the folks that are maybe new to self-storage on the passive side, looking to invest passively, and even those that are looking to invest for the first time, I know for myself, as I looked around, everywhere you look, it seems like, how can I enter this game when all I see are the public storages of the world, Extra Space, U-Storage, Life Storage, all the big folks? How can I break in? But then when I began investing 17 years ago, the REITs, the public companies, they only owned about 9% of all of the units, of all the square footage of self-storage. And now they're closer to 20. Here we are 17 years later, and this is one of the last wild, wild west frontiers of commercial real estate, whereas the other asset classes, they've rolled up. They've continued to buy portfolios, the larger companies, and buy individual assets and then roll them up. And then folks like ourselves have been able to do the same things. We roll them up and then sell to the bigger player up the food chain. doing. So let's speak, if you would, to what you're seeing across either all asset classes, and then pointing to self-storage as the opportunity, and how Tricore has approached the market, given the fact that we still do have an opportunity to be able to do just that and sell off to the larger players.
Yeah, Scott, that's a great point. That's a very good point, because when I'm driving down the interstate or I'm driving down any main road, and I live in Orlando, but even when I'm traveling around the state or traveling across the United States for different meetings and presentations, it's easy to notice, like you said, that the prominent commercial buildings that are going up a lot in a lot of these areas are self-storage centers. And you're going to notice Public Storage, which is the biggest company in the United States by far. And then you're going to see, U-Haul is very big, of course, not just in providing moving services for people, and also CubeSmart and some of these other ones. But what's fascinating, as you pointed out, that's only 15 to 20% of the market. Really, the other 75 to 80% of the market are the independents, if you want to call the cliche ma and pa owned operations. And that's where the real opportunity is for an investor. And that's where our expertise really lays. We have an acquisition team that has very, very sophisticated analysis and analytics and research that we do, and heavy, heavy due diligence before we invest in any opportunity. Sometimes we'll turn down a half a dozen or a dozen opportunities before we find that golden or diamond in the rough opportunity that we will acquisition. I think that's where we bring a lot of value for investors in the Tricore Storage Fund, is that we're very, very sophisticated and we're very picky about the assets that we acquisition and purchase. It's not only about operating them properly to the utmost and being able to go full cycle and have a defined exit strategy, but you have the real opportunity, the real profit, the real return for the investors in the Tricore Storage Fund is made on the buy, the BUY side of the equation. Of course, we provide three different elements of revenue sources for an investor, which is also very unique. The high growth is very important for our investors. Of course, we want high growth, but we also have passive income, which is very important. Passive income, if you have a CPA, and a CPA will tell you that passive income is one of the best revenue sources for you. And then there are also tax benefits. Where do you get tax benefits today in an investment? They're very few and far between, very rare. And we provide a resource of tax benefits through depreciation and other items that are IRS allowed. So this is the exciting elements, these three, I guess you call a three-legged stool, if you want to use that cliche. You have passive income, you have tax benefits, and you have a high growth element by investing with Tricore Storage Funds.
Mm-hmm. So Marcus, we run an education company. We also have an investment company, and you could call it a financial services company when we look at the private equity and our fund. So essentially three companies that we operate. As we head into this recession, we have the benefit of talking to, two different sets of folks. Sometimes they're the active investors. Many conversations are with the active investors that are looking to get into the business because they recognize that, self-storage does extremely well during a recession, and they want to take advantage of the opportunities from the active side. We also have the folks on the passive side that maybe sometimes they found themselves wanting to be active, but they lack the time, or they didn't want to take on the debt risk. They didn't want to take on the lease up risk or take on the development risk. And so they decided, when they look at the returns, especially as you pointed out in our fund, they think, I don't know that I can produce those returns doing this on the active side. So I think I'm going to, look at doing this passively. And we're seeing more and more of that recently with folks that are not only coming out of the stock market because they're tired of the losses and the ping pong, of up and down that we're seeing in the stock market, and people coming out of Wall Street because they want a hard asset that produces income, and all pointing towards self-storage. So, as we head into, once again, this next shift, as we're continuing to focus, because that's what the question on everybody's mind is, how do I pivot and what does this look like? Can you speak to maybe some of the active investors and their mindset becoming passive or passive that decided to go active during these times, and maybe some of those conversations you've had recently with some of the folks you've been chatting with?
Yeah, well, this morning I had an interesting chat with an institutional investor that was looking to invest probably $20 million or more into a self-storage asset class. They had been researching the market. They had 5 that they were looking at very seriously. They discarded 3, and then it came down to 2. We were one of them, and now we're getting into some very serious discussions. I always wonder, with a fund like ours, Tricore Storage Fund, you can come in for $50,000, into this fund, and you have to ask yourself a rhetorical question. If you can invest alongside or with, an institutional player that's investing 10, 20, $50 million or more, that has to be meaningful. The average investor into our fund is probably low 6 figures, 100, 150, but still, if you come in at $50,000 or something around there, you're going to be investing along, A-class types of investment entities that are, Wall Street types of institutional level investment groups or family offices or whatever from around the world. And I think this is something for an investor, a retail investor, to understand that, we provide a very unique product and an opportunity that very few and far between people get a chance to invest in. I think this is the exciting part of what we do. And I think that's a real thrill that we get excited about a retail investor as much as we do an institutional investor. So It's an incredible opportunity.
100% agree. Well, Marcus, so good once again catching up with you and being able to introduce you to Storage Nation out there and how we work together, and specifically your role within the Tricore Storage Fund. And so I'm looking forward to round 2, where we can speak more specifically to the market now that folks know who you are. So before we do that, though, before we sign off, maybe some words of advice to the folks out there that are looking to invest in the storage business on the passive side. What types of things would you suggest that they do to learn about the industry and learn about investing passively before they make that plunge?
Well, I think certainly, your educational opportunity is something to take a closer look at, and also do some research on the internet. Tricore does do a series of webinars where people can listen in and garner more information that way. And we provide an opportunity to just have candid conversations with people. If someone wants to call to me, don't be so bashful. Even though I'm an upper executive of the company, I love talking to people all the time about what we're doing because we're very exciting about this. And actually, we're going to be attending, like I said, many conferences over the next several months and everything. And so we do get sometimes when those conferences, even though they're populated by institutions themselves and ultra wealthy family offices, there's always people invited to come in to these environments sometimes. And we get just a thrill about talking to them as with the big players, the big institutions too.
Fantastic, Marcus. Thanks so much. And before we end here, what is the best way for people to get into contact with you?
Well, they can contact me through if they want to call me directly, I'll give you my cell number. It's 407-420-3011. It's 407-420-3011. Or they can email me directly at mfaller, MFALLER, at Tricore, TRICOREIG.com. So that's the best ways to get in touch with me.
Thank you, Marcus. We will put all of that information in the show notes, folks. And once again, Marcus, it's been a pleasure chatting with you as we always do about the business. And glad I could share you with Storage Nation to learn a little bit more about your role here at the Tricore Storage Fund. And folks, we hope that once again, that if you're looking to get into the business, we provide the resources and the tools for whichever side of the business to enter it on. And that is on the active side or the passive side. So selfstorageinvesting.com for all the tools and resources to learn how to invest actively, and passivestorageinvesting.com if you are looking to get into the business by way of a limited partner investment as well. We would love to have you come alongside of us. So Marcus, thanks once again for your time. Appreciate it, my friend.
Thanks, Scott. Lots of fun. A real pleasure. I look forward to coming back sometime in the future.
All right. Thanks, Marcus. We'll see you all on the next one. Take care, everyone. Hey gang, wait, 3 things before you leave. First, don't forget to subscribe to the Self Storage Podcast and turn on your notifications so you never miss another episode. And while you're there, please leave us a 5-star review if you like the show. Second, be sure to share your favorite episodes and more via Instagram, and don't forget to tag us. And lastly, head to the links in the show description and hit the follow and subscribe button on Twitter and Facebook to get a front row seat as we grow and scale our business and bring you along with us. Take care.